Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Paul from the Sirius Report. He's also known as London Paul. This interview was conducted on Tuesday, April 12th, 2022. Just a little bit of background on the Sirius Report. First of all, I think it's really good value. You get the kind of analysis that bankers would be very happy with on Wall Street or the City of London, and you get it for about $1 a week. And Paul does a podcast every day for his premium subscription. And a little bit of background, the Sirius Report is an independent website with the aim of providing analysis and an alternative perspective on current affairs and global events that we believe are shaping a new political, economic, and social paradigm. It says as well, we are fully self-funded and not backed by any third-party corporation, organization, or individual. And a little bit of background on Paul. He has a track record of accurate predictions and analysis on geopolitical and economic affairs. He's originally a physicist. He was awarded a PhD in biomolecular physics, after which he spent some time working in academia. And then he went on to work in the city in the financial services sector and worked for some major banks until the financial crisis of 2008. Then he left the banking sector to work in the precious metal sector. So Paul, welcome again. You've become a regular guest on my channel, and I think my viewers really enjoy hearing from you.
Well, thank you. That's a very kind introduction, but I echo as well. Everyone should follow you and what you're doing. It's very important. You have a very sobering analysis of things, and you utilize your background as well. So, hats off to you as well.
Oh, thank you very much. So there's a lot going on. Of course, we're not going to dwell too much on what's going on the ground in Ukraine as it pertains to the Russian invasion there. But on the financial side, there's a lot going on in relationship to inflation, to the currencies, especially the ruble and the dollar. And also for the viewers, if you want to find out more about Paul and follow him as well, you can do it on Twitter. And yesterday, Paul tweeted out about Deutsche Bank and Commerzbank. Deutsche Bank is one of the too big to fail banks. And lo and behold, Deutsche Bank is having a tough time today. So Paul, could we start with that?
Yeah, sure. I mean, we've spoken, and I've spoken on my own podcasts with regards to what I believe to be the precarious nature of Western banks, not just European. I mean, a lot of the time the focus is on European banks, but we know effectively all the banks in the West are now, well, you might term lassoed together. So if you had a major contagion problem in a bank like Deutsche, it's going to spread to the UK banks and obviously by extension United States banks. It won't happen exactly in the blink of an eye, but it'll happen pretty rapidly. And yeah, I think I'm not going to comment on who I suspect it is because I don't like speculating, particularly not with regards to these enormous sales that have happened in terms of not just obviously Deutsche Bank shareholdings, that is, but also Commerzbank. So it's kind of referred to it as, and the media as this undisclosed investor who was selling shares in Deutsche Bank and Commerzbank, stakes that are around, well, just over 5%. And they're basically Germany's two major banks. I mean, Deutsche obviously dwarfs Commerzbank, but they're their two major banks. So the proposed sale was about 115 million shares in Deutsche Bank, and I'm rounding numbers down, and about 73 million shares in Commerzbank. And you're absolutely right, Mario. Today, what do we see? Interestingly, Deutsche Bank's share price was down 8.5%, effectively down to just shy of 11 euros. And no doubt that's probably a reaction to this. And the question, therefore, is immediately is why someone who's obviously a major shareholder, just to mention, well, Commerce Bank's down 7.7%. So obviously an effect on that as well. Question obviously is why are they getting out now at this point in time? And the logical conclusion is there's concerns about the stability of the financial system, about banks, and this should be no surprise. Now, okay, there's always the long-standing argument, well, they'll always bail out banks, they're too big to fail. Will always be bailed out, and there's no doubt, and we're not specifically referring to Deutsche or any bank in particular, but we know for a fact there's been secret bailouts of banks periodically since 2008, very quietly. But there comes a point when, for me, you're not going to be bailing out the too big to fails anymore. The problem becomes too great, and it just simply isn't going to be possible to do that. Are we at that point? Well, quite possibly, given all the problems we know that exist in the financial markets. I mean, you mentioned bond markets before we came on. We know generally the huge inflationary problems, what it's doing to do for interest rates. What does that do for the derivatives market? What's it doing for the underlying balance sheet of banks themselves? And what does it also mean in terms of banks in a trading capacity? This enormous volatility has caught, we know, quite a few hedge funds on the hop, and some hedge funds have gone to the wall in the last couple of months. So it's certainly indicative of a major shareholder thinking there are problems. I don't suspect this is in isolation. I mean, and it just qualifies what we've long since known is that the Western financial system is an illusion. It's not held together by reality. And Deutsche Bank's long been slated to be the bank that could pull the Western financial system down. It may not be that. It could be any other bank. It might be one of the Italian banks that starts the problem because, as we've said, if you look at Italy as the third largest economy, and effectively France is on the hook for most of Italian debt, and Germany's on the hook for most of French debt. So cascading effect could be that it could pull everything down. So there are various permutations, and it doesn't necessarily mean that a European bank will go down first. It could be a UK bank, it could be a US bank. I mean, there's reporting this week from the US banks. I think detailed analysis of that could be quite enlightening, and we'll have to wait and see what those the results are. They're out sort of 13th, 14th, and then the 18th. And that might be quite illuminating in terms of their position, because I think beneath all the bravado, there's no doubt about it that Western banks are looking at what's going on in the financial system. They're looking at the monetary policy, they're looking at interest rates, they're looking at inflation, and how that's going to impact them. And they're starting to get nervous and anxious about what's unfolding, because rather like the Fed constantly went on about inflation being transitory, the Western banks regarded everything as transitory. They didn't think that there was any long-term problems. They thought it was short-term. It's obviously getting precarious and getting worse and worse. And they're now finally starting to realize that this is a significant problem. So with regards to Deutsche, we don't know, how much of an inside track this investor is getting out, but they may have seen enough to worry them to say now's the time to get out, and that may reflect specifically on those banks, or alternatively, it could just be a recognition correctly, and this ties in a bit with the fallout and the consequences of the sanctions on Russia for Germany, and the impact it's having on its economy, what it's going to do to its financial system, and the precarious situation that Germany is rapidly descending into. That might be as much a reflection on that. And then the consequences are, well, these are the big financial institutions, so I want to reduce my exposure to Germany, full stop. So that could be an alternative reason why they're doing it.
Yeah, I also see a story here on Zero Hedge that came out this morning. It says European companies plead China to revise COVID zero as Beijing vows stronger policies to reverse economic collapse. And then it says 51% of German companies' logistics and warehousing and 46% of their supply chains are completely disrupted or severely impacted by China's COVID situation. So this is in addition to the Ukraine crisis.
Oh yeah, it's amazing. Well, yeah, I mean, let's look at first off the European Union and Russia, and in very broad terms, if we look back sort of to 2014 when we had the original Ukraine Maidan and there were sanctions put in place, there was a bit of a tail off in terms of EU trade with Russia. Prior to the Maidan, they were importing around 200 billion euros. That was the EU from Russia, and they were exporting around about 100 billion. It kind of tailed off, obviously, because of sanctions, and it was then buffeting somewhere around the 150 billion mark in terms of imports, down from 200 billion. And in terms of exports, they fell from around, as we said, 100 billion euros. This is annually, of course, to somewhere about 60 billion. It's been pretty flat ever since. So obviously there's a trade deficit for Europe, but obviously the consequences, as we know, is Europe imports just on in terms of gas about 155 billion cubic meters annually. And so therefore, you know, this idea that it can just cut itself off from Russian energy, and that we're just talking about gas in this case and not oil, is a farce, because there's nowhere in the world currently that can make up that shortfall. The US kept convincing Europe, oh yeah, that there's an alternative, we'll provide you, and some of the shortfall, and they could only provide 5 billion cubic meters, which is nothing. And then it turned out that wasn't even from the United States. They would have to have begged, borrowed, and stolen from the Asian market, said, can you take 5 billion less and we give it to the Europeans, which is just farcical. And Europe doesn't have LNG terminals either. In Germany, for example, they take 3-4 years to build. So for Germany, it's a complete nightmare. And if you look at, with regards to imports from Russia, I mean, obviously a huge slab of that is energy. They also import other raw materials and commodities. There's machinery and some of the chemical industry sector, some manufactured goods. And obviously, in terms of their exports, there's some degree of chemicals, some machinery, manufactured goods, and a small slice of like food, drink, although increasingly Russia has diversified since 2014 into internal markets. So it produces a lot more food internally. It doesn't rely on imports, for example, although they're relatively small from the European Union. So yes, fundamentally, here's the problem, is Europe made some fatal mistakes with its energy policy. One was it started to phase out coal, even nuclear power, far too soon. It started to rely on completely unreliable renewable energy, and we're not going to get into the whole discussion of that, but the long and short of it is there was a deficit. They don't have sufficient capacity in terms of reserves to manage any fallout in terms of the sanctions, and we're not suggesting Russia's going to cut off energy, but there is a risk of that, and Europe doesn't seem to be paying any attention to that reality. So we have soaring energy prices, which is the lifeblood of any nation, whether it's Germany or the rest of the European Union. So it's causing enormous inflation. It's causing producer price inflation. We're in the Netherlands currently. You notice just going to the supermarket that the hike in prices is quite stark across all range of food produce, as one example. And of course, it affects everything. If commodity prices are going up, then you need commodities to manufacture goods in Germany, which then increases producer prices, and therefore that has to be passed on to the people of the nation. So yes, that's one problem that Europe's facing, and is handling it extremely badly. And then, as you correctly say, with regards to issues in Shanghai, although it's a bit debatable as to how much exports that are coming via Shanghai are being impacted, because a lot of Europe's goods from China come via railroad through to Duisburg, etc. So let's not worry too much about that. There's certainly an impact. And therefore, if you start to have an impact on goods that are arriving from China, it's like a double whammy. And therefore, it puts Europe in an extremely precarious position. And here's the other point worth making with regards to sanctions. Europe is being effectively was bullied and coerced into sanctioning Russia, to the extent that the ultimatum was, look, it's either World War III or you sanction them. So Europe rightly said, well, we don't want World War III, so we'll have to sanction. Now, here's the problem. America's very selective. And it did this since 2014. It bullied Europe into sanctioning Russia. A lot of European companies suffered. Europe suffered because Russia immediately went for import substitution and looked to diverse into alternative markets. And once again, what's the United States trying to do? It's going, well, we're continuing to get Russian oil because we need it, because Venezuela, even though they went on a begging bowl mission to Maduro, he has yet to agree to provide the oil they need, which they weren't able to get because they sanctioned Venezuela, so they went to the Russian. And now, having decided they wanted to sanction Russia, when, well, we'll have to go back to the Venezuelans. I mean, the sheer stupidity and hypocrisy. But in the meantime, they're getting increasing volume of Russian oil. They've also decided to reclassify fertilizers, so because they desperately need fertilizer from Russia. So again, it's do as we say, not as we do. And therefore the US is trying to circumvent a lot of the problems. But effectively, Europe's this punch bag that's suffering enormous problems, because the last thing it can afford to do is have depleted energy from Russia, whether it's oil, gas, or coal. And they're even talking about uranium, which is insanity. And because you've got these bureaucrats and technocrats inside the EU who have no comprehension of the reality, they live in this simplistic world that we can just cripple Russia overnight. And that was the whole purpose of sanctions, was this idea that, well, we'll put sanctions in place, it will cripple Russia within weeks or less. We'll topple Putin, we'll normalize relations to some extent with Russia, and then we can all get back to normal. And without factoring into the equation that Russia's had 8 years to prepare for this in many ways, is being fully aware that sanctions were always on the table, regardless of whether they invaded and went to war with Ukraine or didn't. And therefore, consequently, how this has panned out is Putin still the president. He's got the highest rating in terms of the people since Crimea, maybe even before that. The Russian economy is doing okay. It's got problems. Of course, it's got problems. The ruble stabilized. Their financial system is stabilizing. Central banks made announcements to that effect. And they're kind of unsurprisingly riding the storm. And Europe's increasingly having more and more internal problems due to inflation, due to skyrocketing energy prices, and therefore everything, as we said, depends on energy. So food prices go up. They're starting to get internal unrest in nations, and it's very small at the moment, but we all know that if you have hiking energy prices and food insecurity, they're the two worst things that any nation can have to deal with, because ultimately that affects the masses of the population. And even now, they're not taking it seriously, because they just think, well, we're the West and this problem doesn't apply to us. This is something that happens in, I don't know, South America or Africa or somewhere else. This is like the Arab Spring, when there was obviously, that was in part caused by food shortages, etc. So it's one of those situations where there's not enough people in Europe understanding the reality. And they do think it's this simplistic idea as well that, well, sanctions aren't working because we haven't implied enough sanctions, even though it's arguably questionable what else can they sanction Russia on. But they will keep thinking we can impose sanctions. So we're going to restrict more and more exports from Russia into Europe without realizing they need these raw materials. So they don't have them. Then basically their manufacturing base declines. It's not huge anyway. And there's numerous German companies like BASF, etc., screaming at the government going, you do realize that if you cut the energy supply, or our energy supply is diminished in any capacity, the country will rapidly fall into an economic collapse, financial collapse, and then societal problem. I mean, they haven't said societal meltdown, but they've rightly referred to it as disruptions to society, and they're absolutely correct. And this is one of those situations where you're having trade, commerce, industry who understands reality, has understood the problems they've suffered since 2014 with sanctions that were imposed after the Maidan in Kiev. And then you have these people in government who have no grasp of reality and don't understand the ramifications that if this carries on, and there is always that risk eventually that Russia will look at Europe and just go, it's a hopeless cause. We're just going to cut you adrift. We can find alternative markets for energy and for our exports, and all you Western companies who've left Russia. I mean, the French who have tried to stay there, but there's a lot of Western companies who've jumped ship, just abandoned Russia. And that's going to be filled by companies from the global south. And when that happens, they're never going to be the market's not going to be there in the future for Western companies to go back. And if Russia finds alternative nations who want to buy their energy, then Europe could find itself, when contracts expire, sorry, we're not going to export energy to you anymore. And all these commodities, we found alternative markets. You've burnt your bridges. Someone else wants to buy coal. Someone else wants to buy oil and gas. Someone else wants to buy palladium or aluminium or whatever it might be, or platinum. And the list goes on. And this is the fundamental problem the West isn't grasping, is that, you know, we're not going to get into the operational aspects of the war because it's not what we're here to do. But to all intents and purposes, despite Western propaganda at the moment, Russia's clearly winning the war now. Is that the eventual outcome? Probably, but let's not worry about that. But as far as it looks, the outcome is Russia is successful in whatever its objectives were in Ukraine. Putin's going nowhere. The Russian economy will survive. It will diversify, and the West's reputation is in tatters because of these sanctions, and particularly sanctioning the central bank. So the damage this does for Europe's reputation, the United States' reputation, and the UK by extension, what it does in terms of trading in the euro, the dollar, and the pound, and what that means for those export markets. What does that mean in a broader sense for the global south, who are going, hang on, we can't trust the West anymore, because maybe we'll be the next nation that they'll sanction into oblivion. They'll cut us off SWIFT. They'll sanction our central bank. They'll steal our forex reserves, which may be overseas, and to some extent that is the case. And they're having second thoughts, and that's creating this huge cascading effect in the process. And unfortunately, you know, Europe's has to make a very tough decision, and it's effectively running out of road. Does it carry on being this vassal state for the United States and gets crushed underfoot given what's likely to unfold as a result of it? Or does it have eventually someone within the ranks of Europe? And there is disagreement. Not everyone's unified in Europe. Not everyone's pleased about being bullied and cajoled into sanctions, and the ramifications, given the various nations have very different energy demands from Russia. So, I mean, some need 80-90% of their gas, for example, from Russia, or oil. So they're heavily dependent. Now, if one of them breaks ranks in a major way, then it could start to cause a schism, and then Europe may start to fall apart in terms of this so-called unified approach against Russia, and then who knows what might happen. But Europe's in a very precarious position, and it's completely self-inflicted in terms of the damage it's doing. I mean, it had economic financial problems. As we know, inflation's not something new, but they've just created an added dimension of problems for themselves. Because in quite simple terms, if they hadn't sanctioned Nord Stream 2 and switched it on, the energy prices in Europe would be considerably lower than they are now, which would go a long way to try and curb some of the inflationary problems they're having. But in their infinite stupidity, and because of being bullied and cajoled by the United States, they've made a fatal error in judgment. And the argument is that project ever now going to come online? And it's highly debatable whether it will do or it won't do.
Do you think the second round election in France, I think it's on the 24th of April, between Macron and Le Pen, could have an impact on European cohesion, like against Russia? Do you think if Le Pen were to win, that could really change things and maybe even be a good thing for Europe?
Yeah, I mean, it's a big if. But yeah, I mean, there's the presidential runoff is, as you say, on the 24th between Macron and Le Pen. Now, there's an argument. It always seems to happen in elections. Everyone's furious with the incumbent president. They don't like policies, but it's almost like, well, it's better the devil you know than the devil you don't. I mean, I'm using that in a proverbial sense. And they therefore they'll still stick and vote for Macron. But given what's unfolding in terms of concerns about inflation and energy costs and the impact on people's jobs and food and basic necessities they need. Okay, it's only, less than 12 days now. But if, for argument's sake, Le Pen was to win, and it's a possibility, I wouldn't say it's a high possibility, but it could happen. It just depends on the mood of the voting public. But if it did, then yes, this potentially would have a serious impact on the future of Europe, because Le Pen said, okay, there's one thing saying something, becoming president and realizing that. But I think it would certainly be a big move to reform Europe and make Europe what it should be, which is sovereign nations trading in a bloc, which would be very beneficial to all nations, not having a single euro currency. I mean, how you divide Europe up in that respect is open to debate, whether there's a northern euro, a southern euro, or just go back to French francs, Deutsche marks, etc. That's a whole separate discussion. The other point that she's made is she'd want to withdraw from NATO straight away. Well, if those two objectives came about, well, if France leaves NATO, NATO's destroyed. It'll be the end of NATO. So that there are ramifications on how's the United States going to react to that, and what's the implications for a Le Pen presidency. But yes, it would have monumental change in terms of the very fabric of Europe, because if France starts to be this belligerent nation, because generally to impose any major changes in Europe, you need to have all 27 EU member states in agreement. So if France continually vetoes everything, Europe's not going to make it. Because if France makes mutterings about leaving NATO and actually seriously does, then NATO is completely compromised in Europe to the point it would cease to exist. Because who looks after France's security? France is an independent nation. How's it going to manage its own, internal security, and how does that map into the rest of Europe? Very quickly, the European alliance would fall apart, and France and Germany, for that matter, have spoken a long time about having their own European army and their own independent way of managing their own security. So that could be a step in that direction. But what I ultimately think is, and even now, and never more so now does it seem impossible to believe, and it won't be any time soon, but I think eventually Russia will be part of Europe's security. This could take now, it might be 10, 20 years off in the future, it might not be, but I think eventually that's what will happen, and NATO as it exists now will cease to function, and the US influence via NATO will diminish and eventually become nothing. But that's some point in the future. But that depends on internal matters with the United States and what happens with the US dollar and US Germany in a general sense, because the global South's already rejecting the United States in very, very obvious, overt ways. I mean, there's India, there's the Middle East, like the Saudis, the UAE, and the fact that the global South won't impose sanctions on Russia for very obvious reasons. Okay, people have said they went along with the US vote on Russian aggression, but knowing someone in the UN said to me the Americans were going around bullying every nation into voting with them and threatening nation after nation. If they didn't vote, then there'd be consequences. I mean, so no surprise in that regard. But yes, Europe's at this fundamental point where someone like Le Pen being elected could transform Europe, and Europe in its current form could collapse very, very quickly. Because beneath this kind of facade of all this unity, there's a lot of nations very unhappy with what's going on in the European Union. Certainly, from an economic standpoint, the Netherlands is very, very concerned about ECB policy and this very kind of attitude of, well, just print money and we're going to bail nations out if we need to, and you're going to pay for it. And the Netherlands is traditionally fiscally responsible, and in a broad sense, its economy is pretty good. Okay, it's going to suffer enormously as the EU collapses, but they've been complaining for a long time. Well, it might not take much for the Dutch to start saying, hang on, enough's enough. And if France does something, and then there's obviously nations like Hungary, very clearly pretty anti-EU. I mean, Orban's come out and stated quite clearly, we'll happily pay for energy in rubles, not a problem. We don't have an issue with this. And tellingly, the day after he's elected by a landslide majority, Europe comes out with this very peculiar legislation. We may cut Hungary off from funding because of its undemocratic processes. I mean, it was very clear they didn't want Orban re-elected. And I think if the election had been a lot tighter than it was, they may have tried to question the election and tried to change the result, because they're clearly desperate to keep all of Europe in line. Because again, as we said, if Hungary vetoes measures in the European Parliament, which only needs one nation, then Hungary starts to become a major thorn in the side of Europe. And we know Poland's got issues with the European Union in terms of its own sovereignty. So Europe's not this unified group of nations by any stretch of the imagination. And if you bully and coerce nations the way the United States does, there's always going to be fractures in this apparent unity further down the line, and particularly as nations start to suffer the consequences and this blowback, which is inevitable from Russian sanctions.
Yeah, as we were talking about inflation earlier, we've just had the CPI from the US come out, and it came out at 8.5% year on year. It was expected 8.4. So it's not, some people, I mean, even you and I were speaking before the interview that it could even come out at 9.9. So it was a little more than the expectation, but still really high. Maybe you could cover inflation in the US, because I mean, I look at inflation as a monetary phenomenon. In Europe, it's been a little different. You're having a lot of the rising prices because of the Russian sanctions. But in the US, it seems to me that what we're seeing is a lot of the dollars coming home from abroad, especially after the United States decided to steal 2/3 or so of Russian reserves. Could this also, in your opinion, all these reserves being sold off affect not only the value of the dollar versus real things, but also the bond markets?
Yeah, you make some great points. I mean, first off, yeah, officially CPI is 8.5%, but in reality, US inflation is running somewhere between 20 and 23%. I always say add at least 10% and a bit more on top. So it's interesting, the White House came out and kind of inferred that there'll be some brutal inflationary figure today. Well, compared to what was expected, 0.1%. Okay, whether the figure's reality or not doesn't matter. That's the figure that's been, well, that's the print that's being published. But it doesn't kind of tally up with what the expectation they were conveying. But anyway, that's beside the point. Coming back to your point, yes, European inflation is very different in many contexts to the US inflation. I mean, just look in energy terms. When you look at what it's costing Europe in terms of gas and what the price is in the United States, it's a fifth of the cost. But you're absolutely right. In the US, there is a significantly higher inflation, and I agree with you. I think part of this is indeed because of all these dollars coming home. And if we go to the issue of sanctions and the bond markets, what's very clear, across the entire yield curve, we've seen enormous dumping from whether it's the 1 month through to the 30-year. Now, I don't think it's unreasonable to suggest that's sovereign dumping to a large extent. Now, is that China? Is it Saudi Arabia? Who is it? It could be a whole bunch of nations. It'll be interesting how they tried to hide that enormous dumping in subsequent tick reports. So expect to see the usual suspects with enormously bloated tick report balance sheet. I mean, if you look at the UK, last I looked, it was $600 billion of treasuries. Simply don't believe it. But anyway, parking that, of course, what's I think's accelerated the issue, apart from inflationary concern, is the fact that the United States excluded Russia's central bank and excluded a proportion of its banks from SWIFT. I think from a global perspective, that was a huge mistake because it significantly reduced trust in the United States. I'm not saying trust was that high anyway, but nations were looking at this and going, you really don't want to be holding dollar assets or dollars or US treasuries because we could be next. So I think that's accelerated this massive amount of dumping in bonds. I don't doubt that. But you're absolutely right. I think there's more and more dollars returning home, which is having an inflationary impact in the United States. And the question is, how much longer does this dumping carry on in the bond markets? Obviously, we can't look at the moment. Be interested to see what happens in relation to the entire yield curve on the back of that inflationary print. But certainly, yes, I think that there is enormous amounts of dollars coming in. What I do know, and it's been said to me by 3 independent sources, that there's a lot of high net worth individuals globally who are trying to get out of dollars and buy assets as fast as possible. And that's partly because of what the US sanctions measure, but also concerns about the US financial system, concerns about the whole sort of issue of the trustworthiness of the dollar and obviously treasuries, and therefore the expectation you want to be holding hard assets. So there's an enormous move to try and get out of dollars, and also not to hold sort of dollar assets, or dollar denominated assets, or dollar denominated debt. So it is having ramifications. So the more this happens, the more dollars go effectively return home. We've always said that's going to create inflationary pressure. So I think that's certainly a contributory factor, to the US, where Europe is more related to just inflationary pressure caused by skyrocketing energy costs, which, as we said, impacts every facet of the economy. So, yeah, it'd be interesting what happens. I mean, obviously, the other issue is what's the Fed going to do? There's a lot of mutterings. I mean, some incredible mutterings coming out the Fed with regards to things like, well, we might raise interest rates this year 300 basis points or 200 basis points. Can you imagine the ramifications for equity markets and the ramifications also for those trying to manage debt inside the US? It will be catastrophic. and also talking about tightening, and saying we're going to start offloading, $60 billion a month of treasuries and $35 billion a month of mortgage-backed securities. Well, my first question to that is, who the hell's going to buy these? Who's going to buy mortgage-backed securities that are toxic? Who's going to buy these treasuries in a market where everyone's dumping treasuries? It doesn't make any sense. And again, it just shows how out of touch with reality they are. But yeah, unfortunately, you can't check at this point in time what's happened with the treasury markets. But certainly, the dollar dumping will continue, and a lot of it is on the back of a complete lack of trust in the United States, in terms of on the back of those sanctions imposed on Russia. This isn't about whether Russia, this isn't justifying Russia's going to war in Ukraine. It's just simply a policy-making decision that was deemed a bridge too far for the rest of the world. And we also got to recall that there is a significant amount of trade done in euros. Now, okay, a lot of that might be inside the European Union, but there might be nations now going, hang on, I don't want to trade in euros in energy terms with you anymore. I mean, we know Russia clearly doesn't want to do that and wants to be paid in rubles, but there could be ramifications on that basis for those that do trade in euros with the European Union and going, hang on, we're not going to be party to that either going forward.
With the mention of rubles there, maybe we could talk about where you see the world's monetary architecture, so to speak, going, let's say in the next 5 to 10 years. Will there be like more major reserve currencies other than the dollar? For example, maybe ruble or yuan, dollar, and also the euro.
Yeah, okay, let's look at the ruble. I mean, first off, I'll make the point, because I've consistently said this. The pegging of the ruble to gold was an internal market decision. It wasn't actually fixing the price of the ruble to gold the way it was interpreted. We were conflating different points here. It was to create stability also with the mining sector, and they achieved that. And then the Russians went, hang on, this is happened a lot sooner than we expected, so we're going to have to break the fix, which they have done. But we shouldn't conflate that with the longer term strategy, which has been in place for years, where Russia, because it has enormous commodities and the basis of enormous commodity, that it can in the future begin to price in a global sense, not just oil and gas, but it can sell commodities. And it's kind of alluded to the fact that in the future it could sell the whole raft of commodities it sells to the world in rubles. That is a distinct possibility. They're ongoing developing the crypto ruble, which could be used in international trade. That could be a currency that the Eurasian Economic Union could adopt for trade between each other. Why would you use a crypto ruble? It's very cost effective. You can process transactions extremely quickly. There's a lot more transparency behind those transactions. So there's a lot of reasons why the Eurasian Economic Union would adopt it. There's also the reciprocal nature between China and Russia. I mean, there's no doubt, if you look at Russia as a major commodity provider, why the ruble, could start to be adopted more on a global basis. That's very beneficial to the Russian economy, to the ruble, and to Russia's international standing. And it could take a huge chunk of trade away from trading in the dollar for commodities to trading, obviously, in the ruble. The flip side to that is China's developing and very aggressively the digital yuan. Why? For internationalization, international trade. And China, as a major importer of commodities, can then also find ways of trading commodities in the yuan. They have the exchange of the commodities exchanges to do this, and it's been quietly growing for a number of years. So the yuan could become a major internationalized currency. Okay, there's the argument of internal markets, but they're gradually addressing that in a very careful way. And from their perspective, that's the right thing to do. You just don't open all your markets up and then, reap what you've sown, and you may make some catastrophic errors of judgment. But I mean, of course, they have to keep doing this. So that's another possibility. And therefore, yeah, there isn't going to be a world reserve currency in the future. There isn't any need in the modern world to, and frankly, have a world reserve currency for a long time. I mean, it's perfectly feasible, provided the currency has stability. And then, of course, there's the aspect of backing currencies with gold, like the ruble and the yuan. And maybe, in the future, Russia may go, well, we can have a basket of commodities and we'll include gold in that to back our currency. Or there's all manner of different ramifications as to how this plays out. And therefore, if you start to look at the global south, and the global south may look at developments and go, well, we're happier to trade in the yuan and the ruble going forward. I mean, the global south is going to take a huge chunk of trade, their vertical growth markets. So that could start to take an enormous amount of trade out of the purview of the dollar, out of SWIFT, etc. And what happens with the euro is up for debate. Does the euro survive, or does it cease to be the euro? And that's a whole separate subject. But going forward, obviously, there might be a modified euro. There might be a euro, as I said, for the north and south, or just there was talk probably a decade ago, and that nations might return to their old currencies, like the French franc, as we've said, or the Deutsche mark. I mean, but that's open for debate, and it's not clear exactly what the European Union will do. But it's possible the euro may survive in some capacity, and therefore then that could be traded as well. I mean, it might be a currency that's largely, could be traded internally within the European Union as a possibility. I mean, okay, how's the currency going to be backed? Okay, there's an argument of, well, Germany has a sizable amount of gold reserves, Italy does, etc. But that's a bit of a complicated equation because, again, you've got 27 member states, and maybe they should learn the lesson that it's not feasible to do that, given the euro is a complete disaster and should never have been implemented for nations with such diverse economies and just basically in terms of, from a financial perspective, the euro is far too strong for southern nations, and ironically too weak for Germany to some extent. Well, that's a bit questionable. So yeah, there are many possible permutations to this, but certainly the intention's always been, in terms of the multipolar world, for the yuan to be internationalized and eventually the ruble to be internationalized. And I think this is where we're conflating things. And to some degree, you can understand why people have done this, because, let's look at future trade of Russian oil and gas in the ruble. It makes sense. So when Russia came out and said, we want to be paid in rubles, yes, there's the automatic assumption, well, Russia's moving to the petro ruble, and in the future, that's very likely in some guise to be the case. But this was done out of a necessity because of the sanctions policy. They're making reactive moves to situations that actually for them is beneficial to do this. But it does link in some capacity to future developments. But we have to be careful we're not conflating two ideas and coming to the conclusion that, well, Russia's going to be paid in this, and then this links to gold, and then Europe's going to have to pay Russia in energy with gold. I mean, Russia was very clear. We want to be paid in rubles. There was some passing flippant remark that if you don't pay us in rubles by someone in the Duma, well, then you pay us in hard currency gold, and that got completely taken out of context. But what unfolds in the future, well, is very much open for debate. But certainly, the ruble will become more internationalized. It will certainly figure in terms of commodity sales. How that pans out globally remains to be seen. I mean, can we ever see, for example, the United States paying Russia in rubles for energy? No. I mean, that's just not going to happen. But what's the tie-up between Russia and China and how they'll trade? Well, they may trade in both currencies, given how the internationalization of both can come about. So this may depend on how they decide to trade in future. But certainly the goal for the Chinese isn't world reserve currency status. It's to internationalize the yuan and have the capacity for nations to be able to trade in that currency, and which is a sensible move. And the same also for the ruble. But who knows, in 10, 20 years, we might be talking about a currency that comes out of Africa, that maybe for the African continent, because Africa starts to develop and become a vibrant pole in it itself. Maybe the Asian nations will develop a currency that it uses for trade amongst itself. It might be, I don't know, a digital Asian, for just, I don't know what it'd be called, but that's the possibility. I mean, that's an enormous trading block. So this is the future. It's going to be we're not going to have one world reserve currency. We can have lots of different currencies used in lots of different mediums for trading. And, therefore, the Eurasian Economic Union could adopt, as we say, a digital ruble, and they trade amongst themselves. But we know, for example, the Eurasian Economic Union might sign a free trade agreement with the ASEAN nations. So how do they trade with each other? And, so we have to see, as all this extending multipolar world comes into existence, and how these poles develop and how these existing trading blocks exist, then we'll start to see, maybe there might be some trade between the EAEU and crypto ruble, depending on what those requirements are, or if there's a cryptocurrency that's used for trading amongst the ASEAN, that may also figure in how it trades with China, or also how it trades with Russia, or via the EAEU, or maybe just directly with Russia. So it's an unfolding picture, and at this point, it's difficult to say precisely what's going to happen. But certainly, currencies will have to be backed in some capacity. We're going to have to move away from fiat currencies. We're going to move away from world reserve currencies and effectively a nation weaponizing a currency against the rest of the world, which the United States has done. And that's the big fundamental change. And certainly precious metals will form part of that without any doubt. And the Chinese kind of very quietly let it slip when one of the major policy making decision makers inside Beijing back at the end of last year very just casually dropped in the conversation that gold will form a very important part of the financial system in the future, and that was it. Just a very simple throwaway almost remark, but that has very, very sort of powerful connotations in how things will play out in the future.
As we approach the hour mark, Paul, I see here that the Treasury market actually is rallying after the CPI numbers. For example, the 2-year yield is down almost 8 basis points, like the 3 and the 5-year. The 10-year is down 7 basis points. And that means, of course, that bond prices are rallying. And we're also seeing the stock market rally. The Dow futures up about 2/3%. The NASDAQ is up almost 2%. So with that, maybe we could wrap up, and you could tell us your view, your medium to long-term view in terms of what you think is going to happen to the major asset classes like stocks, bonds, currencies, and hard assets.
That's a good one, because I don't do this typically, because it's not. I kind of work on things being event-driven, not time-driven. But
yeah,
I think what's interesting, but it's a great question. Look, I think what's interesting to know is we've also seen on the back of this that gold and silver are intraday highs. They're both at nearly 1%.
I see that. Yeah.
So the implication is that inflation's still seen as a problem, and therefore there's the old beating down of gold and silver, but certainly what that indicates is that people still see inflation, and there is a move or a continued move or some sustainability in gold and silver at these prices. Okay, forget all the manipulation, because we're not here to discuss that. I think what's interesting as well is, though, there was dollar index is, well, it's pretty flatlined. I think with regards to the bond markets, it'd be more interesting to see what the fallout is in 2, 3, 4 days next week. I mean, is this just one of those blip rallies, or is it something that, I mean, I would personally be surprised if we suddenly see a huge buying of US treasuries at this point. But then ultimately, there might be an argument that the Fed's going to try and cap this, and therefore it doesn't mean the Fed's going to go out and suck up all these treasuries, because therefore its balance sheets start expanding and people start asking some serious questions. But we know proxies have been hoovering up treasuries for a long time. So there comes a point where, you know, when does the Fed intervene, or is it that huge a problem that they can't intervene? Because it's one thing going, well, actually, we're going to have quantitative tightening, and then 5 minutes later going, well, actually, in retrospect, we're not doing that now. In fact, we're going to have enormous quantitative easing. We're going to start buying bonds. I mean, it would just send a very, very negative signal out. But the question is, I mean, there's an argument that says in inflationary terms that as things stand, people may just say, well, I'll get out of dollars. Oh, okay, you can buy precious metals, you could buy assets, and nothing increases that happening. But you will get some people who may think, well, inflation is stabilizing, and they may start buying stocks again. Personally, would I be doing that at this point in time? Absolutely not. But it's very difficult, because from my perspective at the moment, I look at what I see in the market. I look at the financial system, I look at economies, I look at all the inherent risks. And for me, the risk of a major blowout is any day going forward. That doesn't mean it happens today or tomorrow or next week, although in principle it could do. But, you know, how people perceive risk at this point in time. I mean, for me, buying equities would be ridiculous. This is only my personal viewpoint. It's not investment advice, but I don't particularly see any great emphasis on people piling into equities. I mean, yeah, could the Dow go to 50,000? Well, possibly. But it seems as though every time there's a little rally, there's a sell-off. And we know there's been a lot of insider, high net worth people getting out of equities. There's no doubt about that. So do I think anyone really should be enthused to want to buy into the bond markets again? Absolutely not. Because the other question is, there's the issue, what's the Fed going to do? I mean, there's a lot of mutterings. It's unclear. Is it 0.25% rise, 25 basis points? Is it 50? Or is it 100? What are they proposing to do? Why are they going to change their mind and go from quantitative tightening, apparently, all the muttering? I mean, it's because they're going to be extremely reactive. And then the other question is, of course, with regards to inflation, what I think what's going to be more telling is what's the figures for April and May, on the back of, if we're right, that, and certainly has been, enormous amounts of dumping of treasuries, and more dollars are coming home. Is there going to be ramifications for inflation in the US? Is this just a kind of blip, and people think, oh well, it's peaked, next month it'll be 8.2%, then it's going to be 7.9, and therefore inflation's under control. But I think by virtue of the fact that gold and silver are kind of intraday highs, okay, 1% rise, not any great shakes in the grand scheme of things, and probably in an hour or two it'll be back down to flat on the day. But the point is, that suggests to me that there is concerns that you know, the markets aren't what people may perceive them to be. And I mean, what I don't think we're definitely not seeing is enormous amounts of people buying, high net worth individuals. There's some of it going on, piling into gold at this point in time, and they're probably the ones who'll pile into it when it's too late, or try to. But if I'm guessing, and I am, because I don't, you know, I think equity markets will be pretty stagnant. I mean, I think the bond markets, you may get a brief run, but I mean, there's got to be intervention at some point by the Fed, and it will have to be done covertly. So they're going to start intervening now, possibly, because there comes a point when they're going to want to try and cap these rises. Because I mean, you think if the 10-year hits 3%, and okay, that puts enormous pressure in certain quarters for them to have to raise the Fed funds rate considerably. I mean, whatever they perceive that to be. So this causes enormous problems. So there is an argument they'll want to contain it, but as ever, the markets are totally illusionary, and I've long since given up trying to interpret them. I mean, I used to do a lot of trading, and a decade ago, I looked at it when this is just impossible now because of how the markets are controlled and influenced, how algos influence them, how HFTs are influencing the market. So I don't tend to deal in this. I do make some trades occasionally, maybe 3 or 4 a year that I think for me are bankers, and I can get some mileage out of it, but I generally don't trade because I think it's completely impossible to judge. But for me, I think let's see what happens with the bond markets in the next week or so on the back of this CPI print. We're going to continue to see dumping, or will we see? I mean, I just don't see why anyone would want to buy in at this point in time. There's way too much uncertainty. And particularly, I think if there is a major sovereign dumping going on, there's going to be a lot of people globally who are going to be aware of this going, well, if the sovereigns are dumping, I don't think it's got anything to do with the United States inflation print. It's to do with a total lack of confidence in the United States as a responsible custodian for the dollar. And we've seen this already to be evidently the case. Forget what's going on in Russia, which was really the tipping point and the icing on that cake. So, yeah, I don't know. I mean, I can only be as honest as I can be. Do I think gold's going to, at this point, keep rising? Well, possibly. But I mean, I always say for me, gold and silver, when it matters, holding it will matter. And until then, it's just a lot of noise. And I don't pay attention particularly to it too much. But yeah, so in the kind of roundabout way I'm going, it's very difficult to ascertain. But I think if we were talking about this in a week's time and we observe what happens in the bond markets, then we might start to get some indication of the perspective. But then, as I said, there's always the issue that at some point the Fed's going to have to come in and stabilize. I mean, there's an argument it's surprising they haven't already done it, but I think that's probably as much to do with the fact that the dumping is biblical and it's very difficult. What are they going to do? I mean, you can try and subvert and squirrel away some treasuries and hide them in the Caymans or the UK or somewhere, but if it's on an enormous scale, how are you possibly going to do that? There comes a point when you can't. If the Fed's balance sheet starts becoming bloated and it keeps rising, then serious questions are going to be asked by many inside Wall Street and beyond what exactly is going on. So.
Yes, and as for inflation, I'm of the opinion that well, if you look at last year, they're saying it was transitory. They're completely wrong. Now they're saying that it's peaking, and I think they're going to be proven wrong. So that's
I would agree with that.
Yeah. So, Paul, thank you very much for your time. Maybe before we close the interview, you could tell the viewers where to find you, and yeah.
Yes, thank you. Yeah, well, obviously, first off, we're on Twitter. We have quite a really quite a big profile on there. I mean, I'm surprised it took a war for our following to quadruple, but for some reason it has. So our obviously handle on Twitter is at the Sirius Report, and we're very active on there. We obviously, as you very kindly mentioned, our subscription service for podcasts. We're now over 1,400 podcasts, and we've detailed for the last, 5.5 years, everything to do with the ascending multipolar world and the descending unipolar world, and that's geopolitically and economically and financially. We've discussed it, and I think we've highlighted things pretty accurately, and we've posted some old tweets to highlight to people that we were aware of things a long time ago. And it's only now I think we're starting to get more traction where people are beginning to believe it's reality. I think for a long time people didn't think it was possible. So if you want to subscribe, we'll be very pleased for you to do so. It is, if you subscribe for a year, it literally is just over $1 a week. And we think it's extremely good value. And you might not want to listen to all podcasts, but we put a description in for each of them. So if there's things you might not be as interested in, that's fine. But we do 5 a week. They're roughly 20 minutes each. And often I'll lump 2 together because it's easier to do it that way. And also sometimes for continuity, it's better than going, well, I've done 20 minutes, I'm going to stop now, because then you lack continuity and you're putting it in another episode. But yes, we do that, and we want to try and spend more time and put articles on the website. It's just a time constraint. And also we've got a very active Telegram page at the moment. It's there for in case we get banned on Twitter effectively. And
okay.
Really, it's just,
yeah.
I mean, there is some stuff we put on there because there's things we know that if we put it on Twitter, we probably will get banned. But yeah. So that the Telegram group is really a backup. But at some point, if we have the time, then we might utilize that in a different context to Twitter. But there's a lot of people who don't like using Twitter who are following us on Telegram. I think we've got over 3,000 followers now.
Okay, great. Paul, I'm sure we'll be talking again soon in the future, and I wish you all the best.
And you likewise.
Thank you. Take care.
No, thank you, and you too.